Welcome back to the Deep Dive. Today, we are laser focused on one of the most remarkable corporate strategic shifts we've seen this earnings season.
We're talking about Upexi, ticker UPXI.
Exactly. Their Q1 fiscal 26 call. And this deep dive isn't about, some incremental growth. It's about a complete corporate metamorphosis.
It really is. They've totally abandoned that old consumer brand roll-up idea.
Gone. Now they are, and they're very clear about this, a dedicated digital asset treasury company.
And this is the first quarter where you can really see that new narrative in the numbers. They're basically a MicroStrategy analog, but, for Solana.
Which means you, the listener, you have to forget the old company. This is a capital markets vehicle now.
Right. And our mission today is to dig into those financials, figure out the strategy, and ask the big question. Is this disciplined execution, or is it just a high-risk gamble?
So let's jump straight into the numbers, because they painted a picture that was so confusing it gave the market whiplash right after the call on November 11th.
It really did. You had two completely different stories running at the same time. Let's start with the good news, the spectacular news.
The top line beat.
A massive beat. Total revenue came in at, 9.2 to 9.24 million.
Yeah, and the consensus was way down at 7.3 million. That's an astonishing 109% year-over-year growth.
And you know where that all came from?
The new digital asset segment, all of it. $6.1 million generated entirely from Solana staking.
Which is just, that's incredibly high margin revenue. It pushed their gross profit up 183% year over year. On the surface, it looks like a home run.
It does, but you have to look past the paper money. The GAAP EPS, that looked stellar. A positive $1.21.
Which is a huge turnaround from a loss last year. But here's the catch, and this is the critical thing for you to grasp.
It wasn't real cash, was it?
Not at all. That entire GAAP number, pretty much all of it, was driven by a massive non-cash, unrealized gain of about $78 million on their Solana holdings.
Okay, so for anyone not familiar with crypto treasury accounting, break that down. What is an unrealized gain, and why is it hitting the income statement?
It's just mark-to-market accounting. They hold 2.1 million SOL tokens on their balance sheet. At the end of the quarter, they have to value them at the current market price.
And Solana's price went up a lot.
Dramatically. So that increase in value gets booked as a gain.
Yeah.
It boosts net income, but no cash actually changed hand. It's a valuation change, not a profit from, selling widgets.
That clarity really makes the second story, the operational one, so much more important. If we strip out that $78 million paper gain, where did the actual operations land?
They missed, and badly. The non-GAAP or operating EPS, which is what the street really looks at for core health.
That came in at negative 12 to 13 cents.
Right, and consensus was for a loss of only a penny, so they missed by about 11 cents. It's unavoidable. Spectacular top line, huge paper profit, but when you look at the core business, they're still burning cash.
Which sets the stage perfectly for this whole strategic pivot. If the ops are weak, you have to ask how management justifies this. What is the real engine they're trying to build?
And they were explicit about it. They said, we are a Solana-focused digital asset treasury company. Full stop.
And they're not shy about who they're copying.
Not at all. It's the MSTR template, right? Mm-hmm. They are modeling their entire strategy directly on what MicroStrategy did with Bitcoin. The goal is simple. Maximize adjusted SOL per share.
What I find fascinating is why they chose Solana. It wasn't just, throwing a dart at the board. They seem to believe Solana is the endgame winning high-performance blockchain.
Yeah, for internet capital markets. They stress these structural advantages that go way beyond just hoping the price goes up.
Things Bitcoin can't do.
Exactly. That's the core of their thesis. They get two things MSTR doesn't. Staking yield and the ability to buy deeply discounted, locked tokens.
And staking is the key here. That's the cash flow engine.
It completely changes the game. With proof of stake, they can take their 2.1 million SOL treasury and just generate yield passively. It turns a static asset into a productive one.
And that engine is running hot. $6.1 million in Q1 from staking is already huge, but the forward run rate is staggering. They're making over $75,000 a day right now.
Just think about that. 75 grand in passive yield every single day. That fundamentally changes their financial risk profile compared to a normal corporate treasury.
And Q2 should be even better since the whole 2.1 million SOL will be staked for the full quarter.
Right, so that daily run rate should translate into an even bigger number next earnings report.
Which brings us to how they pulled this off. The capital markets execution. This management team, they've got pedigree, founded XPO logistics, hedge fund backgrounds.
And they keep stressing that this is a capital markets exercise, first and foremost. It requires discipline.
And some pretty innovative financing.
Absolutely. They highlighted two big raises they described as industry firsts for an altcoin strategy. The $100 million equity placement in April, and then that $200 million raise in July.
Okay, the July one is interesting. It included an in-kind convertible note. Sounds super technical. What does in-kind mean here, and why is it a big deal?
So a normal convertible note lets the holder convert their debt into cash or stock. An in-kind note, in this context, gives them the option to convert that debt directly into the underlying asset.
So, into Solana tokens.
Into Solana tokens, or a cash equivalent tied directly to them. It's a clever bit of financial engineering. It lets them raise a ton of capital without putting all the pressure on their stock price, and it gives the debt holders a direct claim on the very asset they're trying to accumulate.
That's a really smart way to build a treasury around a single digital asset. But wait a minute, isn't calling it a capital markets exercise just a fancy way of saying it's a massive, high-risk bet on a single altcoin? How do they actually manage that risk?
That is the critical challenge. And management stressed discipline to try and separate themselves from, the typical crypto digens.
Right.
They're talking up a prudent risk posture. Leverage is capped at 20%. They're avoiding aggressive on-chain trading, and they're using qualified custodians and diversified validators. They're trying to be the grown-ups in the room.
But is that real governance or just signaling? I mean, they added guys like Arthur Hayes, John Najarian, and SOL Big Brain to an advisory committee. That definitely boosts their crypto cred.
It's both. The advisory committee gives them market credibility and connects their traditional finance background to deep crypto expertise. But the structural discipline, that 20% leverage cap, that's the operational moat they're trying to build. They're saying, we're smart capital, not tourists.
Shifting to the outlook, they didn't really give any traditional guidance, did they? No revenue or EPS numbers?
No, not at all. They focused entirely on that core metric, adjusted SOL per share.
And how did they do on that?
They killed it. Grew at 47% in SOL terms and 82% in USD terms this quarter. That shows the capital raises were immediately accretive, and then they announced a new tool to push it even higher.
The $50 million share buyback.
Which is massive for a company their size.
So why is that so strategic right now?
Because the stock is trading at a huge discount to the value of the SOL it holds. So if they can buy back their own shares on the cheap, every remaining shareholder instantly owns a bigger piece of that 2.1 million SOL pie. It's a huge vote of confidence.
They also leaned into the macro story, talking about a potential Clarity Act in the U.S. for digital assets.
Yeah, the belief is that regulatory clarity would be the catalyst that forces big tech and big finance to jump in, which would validate their choice of Solana as an institutional grade chain.
That's the long-term bull case. But the market's reality is a lot choppier.
A lot choppier. Management was super bullish on the call, but the stock performance after shows a ton of investor uneasiness.
Talk us through that volatility. It popped initially, but that didn't last.
No. It closed up about 5% the next day, but within a week, all that enthusiasm was gone. The stock retraced down to around 260, which was a 23% drop from the high.
Wow. So it just shows the market's skepticism about that concentration risk.
Exactly. Despite the revenue beat and the clear strategy, the investment case is now completely tied to the price of SOL and staking yields, period.
And the stock has really lagged.
Dramatically. It's lagged broad equities, and more importantly, it's lagged the blockchain equity ETF, PKCH, which is up over 96% this year. Upexi is just trading as a heavily discounted, high-risk proxy for the crypto market.
It's the MicroStrategy playbook, but with the risk turned way up and trading at a huge discount to its assets.
And the thin analyst coverage just highlights how hard it is for the street to value this thing.
All right, that sets us up perfectly for our final segment.
This is not financial advice.
Okay, given the huge pivot, the crazy price action, and that new $50 million buyback, there is a clear dislocation here.
The setup is this. Upexi is down 59% over the last 3 months, way behind the crypto benchmarks. Yet it's holding 2.1 million SOL, cranking out yield, and management is about to start buying back stock. It seems deeply undervalued relative to its assets.
So what's the outrageous but plausible trade?
We're calling it a SOL discount convergence pair trade. You're betting on management forcing the market to re-rate the stock.
Okay, walk us through it. What's action one?
Action 1. You go long Upexi. You're betting that management aggressively uses that $50 million buyback right now at these depressed prices, which would be massively accreted to that SOL per share metric.
And you're betting on cleaner numbers next quarter.
Exactly. The full staking revenue from the entire treasury should hit the books, which might quiet some of the concerns about the operating burn.
So you're betting on execution and the discount closing. What's action two?
You partially fund that long position by shorting a broad blockchain equities ETF, like BKCH. Right. The whole point is to isolate the idiosyncratic value here. If the whole crypto market tanks, your short leg protects you from some of that systemic risk. But if the market stays flat or goes up, you capture Upexi's recovery as they execute the buyback, and that $75,000 a day staking income proves out. You're isolating their execution from the general crypto noise.
A fascinating way to bet on management's ability to execute without taking on the full, naked altcoin risk.
It's a bet on the discount. That's what the market is giving you right now, a huge discount because of perceived risk and a lack of a track record.
So what's the essential takeaway for you, the listener? Upexi has pulled off a massive pivot. It's now a cash-flowing treasury vehicle with institutional ambitions, built specifically to accumulate Solana.
But the takeaway is still a double-edged sword. Huge success in accumulating assets and generating revenue, but the core operating profitability isn't there yet, and the stock is a slave to the volatility of a single digital asset.
And here is the provocative thought we want to leave you with. Management proved they could increase SOL per share by 47% in a single quarter through smart capital raises. So the question is, what is the maximum leverage the market will tolerate before it sees their prudent 20% limit as either too aggressive or maybe even too passive, given how big that discount is?
It's a tightrope walk between discipline and performance, and the market is going to be the final judge.
Thanks for joining us on this deep dive into Upexi's Q1 call. We encourage you to think about how this MicroStrategy 2.0 playbook might translate to other sectors.
Until next time.